Let's get our first corporate on board now. Delhivery posted a mixed set of numbers, as you heard Mangalam just point out a while back. The growth was muted, but it's the operational performance that has improved on a quarter-on-quarter level. Sandeep Barasia, the Executive Director and Chief Business Officer at Delhivery, is joining us now to help us understand the business as well as the way forward. Sandeep, great having you on CNBC-TV18. Thank you for joining in. There is this term that I guess is overused by now in your space, path to profitability, right? Just tell us a little bit about that. Put down some numbers for our viewers and for your shareholders. What is the long-term target in terms of the EBITDA margins? In Q4 of this year, you managed to do about 0.3%. But by the end of FY24, what could the margin performance be?
Hi, Sonia. That's a great question. And I think, as you rightly said, that we did do 0.3% positive at the end of Q4. And I just want to remind people that at the end of Q1, we were minus 12.5%. And we've turned that around to positive 0.3% in Q4. From an EBITDA basis, we are pretty much break even. And the growth momentum continues. And the incremental margin that we're experiencing as a business continues to be very, very high. So we don't see any reason for that trend to actually not continue in the near future. So I'm not going to point out an exact target or an exact date when we will actually, what we will hit when. But there's no reason for us to believe that the last 4 quarters are not going to continue to the future. And that's the objective. Ultimately, the objective of the business has to be to deliver positive cash flow for shareholders. Getting to EBITDA positive was the first step. Growth is continuing. Incremental margins are continuing to be very, very strong.
Sure.
And so I think that trajectory should continue going forward.
So what are the margin levers that you have at the moment? Are you looking to bring down costs in a certain way? If yes, what would they look like over the next, say, couple of quarters? And when you say growth momentum will continue, what kind of margins are you targeting? I mean, are you looking at low single digit for the first few years? At some point, are you looking to get to double digit, just to get a sense of how things are headed from here?
See, again, I don't want to get specific in terms of margin targets. Sure. Both, two of our largest business, Express Parcel and Part Truckload, very similar businesses. They're quite complicated in terms of being able to execute on the market. And there are global benchmarks of companies that actually make very high margins in this business. There's no reason why India should be any different. So eventually, we should get to considerably higher margins from where we are right now. The levers that we have, they're cost levers and growth levers, right? In terms of cost levers, through the last 4 quarters, we've become extremely efficient as a business. And that was always going to be. That was the logic behind we did the M&A. That's the logic behind how we've sort of grown as a company. This is a scale-driven business. As we continue to get larger and the scale efficiencies come in, our cost structures will actually continue to improve. I'll give you one example, is the introduction of the 46-feet tractor trailers that we run in our network. Now, we've actually been able to roll them out much faster than we thought we will roll them out. And as we keep rolling them out, we are seeing that there's still a lot more headroom for us to roll out those tractors, even to smaller towns like Kanpur and Bhopal. It's not something that's just restricted to Bombay, Delhi, Bangalore. And as the network continues to expand and the rollout of the tractor trailers continues to grow, we are seeing that there's still a lot more efficiency that we can gain as a business. So there's definitely cost to have.
Okay, all right.
Sorry.
Hi, Sandeep. Good morning. Sandeep, you mentioned considerably high margins is where you're headed. Could you quantify what that could be with a time frame, maybe in the next 12 months, next 24 months? What could that range be, considerably high margins? And also, in the last 4 years or so, you've grown at roughly around 45%. CAGR, I'm looking, 4-year CAGR. You continue to maintain that sort of momentum going ahead?
So obviously this year, FY23, the growth was muted. But what we have seen, Nigel, is that we've been gaining share on Express Parcel. I think in the long term, we are very positive about e-commerce growth in India. We do think it will continue to grow at 25-30% over the longer term. In the shorter term, that can be different. You'll have cycles up and down. We've been gaining share in Express Parcel. So I think that we're very positive about where Express Parcel is going to grow. On Part Truckload, firstly, overall Part Truckload grows faster than GDP plus. The organized segment grows even faster. And then once again, we've actually massively grown in the last couple of quarters over there, 23% growth just in last quarter. So we are very bullish of both e-commerce as well as Part Truckload in terms of growth going forward. I can tell you that April for Part Truckload was stronger than January, which is technically a much higher quarter. And May so far has been stronger than February. So the growth momentum is there. Now, what I mean by margins is I don't want to get to the specific number on margins. If you just see what we've done in the last 4 quarters, that has gone from minus 12.5% to plus 0.3, right? So that's almost a 13% shift in just 4 quarters. So, that we've got to try to continue pushing that forward.
Sandeep, hi, good morning. Prashant here. Yields are lower, right? Yields have come off. So both for the part truckload and the express parcel business as well. And that's even as volumes have grown. Actually, volumes for the part truckload business have also, revenues have seen a fall year-on-year basis. But just to focus on yields for a bit, could you give us some sort of way to think about this? What will happen here for both businesses?
Yeah. Hi, Prashant. That's a good question. See, I think it's very important for people to, it's great that you asked this question. I think it's important for people to understand that yield is a factor of mix. And so quarter on quarter, mix can change, right? Parcels can be smaller, lighter, they can travel less distance. And the change in yield is really a factor of that. In express parcel, Q3 traditionally is a quarter where people tend to buy a lot of white goods, tend to buy a lot of heavier items. And so Q3 will always have higher yield than Q4. And similarly in part truckload, it's generally just a factor of mix change, no material change in pricing or any of that stuff. In fact, I think in part truckload, the whole industry has not driven any pricing change. So these are just purely mix changes. And actually, I think you made a very important point that despite yield coming down, we've actually expanded margins. So yield by per se doesn't have an impact on the margins of the business. When yield is coming down, it's because the parcels are getting smaller or distances are being traveled are less, so cost also is coming down in the same proportion. So yield per se doesn't matter. It's actually a combination of what yield and cost together that actually really matters to us. So it's just a pure cyclical thing, pure cycle, a mix issue, rather than a genuine pricing change in anywhere in the business.
Okay, all right. We actually have many more questions for you, but I guess we will leave it for another day. Sandeep, always a pleasure speaking to you. Thanks a lot for joining us and all the best. It's been a challenging last couple of years for the e-commerce business. I'm sure things are getting better now. So that's Delhivery. Very positive statements coming through. They're expecting a 25 to 30% growth, long-term growth in the e-commerce space in India, and they expect their margins to be considerably higher from here. Let's slip into a quick break. We'll in fact pose all of these questions to Prakash Diwan, who joins in for some fundamental stock analysis. Anuj will also be with us for a quick trade setup in just a bit. Stay tuned.